Peter Thiel's crypto exchange is about to go public, and it has a vision to become the BlackRock of crypto, forming a bridge for how the world's richest and oldest financial institutions diversify their trillions into the world of DeFi. This business is complex, but I did the hard work laying it all out for you. By the end of this video, you'll understand where Bullish stands today and its potential if it can execute on its goals in the next few years. Before we dive in, please note this video is for informational purposes only. It's not financial advice, and make sure to do your own research. Bullish's origins are critical to understanding the problem that this business is solving. And yet again, we have another crypto story that starts with video games. Brendan Bloomer got his start in business at age 15, selling magic swords in World of Warcraft. Then he founded Hong Kong's largest digital property agency, but his biggest venture would be block.one, the company behind a record-breaking $4 billion initial coin offering in 2017. Now, it was around this time that Brendan realized the problem that Bullish would later solve. Block.one's ICO left them sitting on billions in crypto assets, but they had no clear path to monetize them. That's when Bloomer had his light bulb moment. Institutions with massive assets like block.one wanted to trade crypto, but they couldn't use exchanges like Binance because of compliance and liquidity problems. So what if there was a crypto exchange built specifically for the needs of large asset managers? That's Bullish. In 2021, block.one spun out Bullish as a subsidiary, seeding it with billions in assets to get started. Then Peter Thiel caught wind of the opportunity. He led Bullish's $300 million strategic funding round and became an advisor. Thiel wasn't just betting on crypto, he was betting that the future belonged to whoever could bridge the divide between traditional finance and decentralized finance. And Bullish, with its massive treasury and a compliance-first approach, looked best positioned to win that future. Okay guys, so I still haven't told you what Bullish actually does as a company, but by the end of this section, you should have a pretty solid understanding. When you think of a crypto exchange, you probably think of Coinbase or Binance. But Bullish is very different because it doesn't serve any retail investors, there's no consumers involved with this, and it differentiates itself based on two core tenets, credibility and liquidity. Let's start with the latter. When institutions trade on platforms like Binance or Coinbase, they're competing with millions of retail users for liquidity, and that can disappear during market crashes. With a typical exchange, when you want to buy Bitcoin, they match you with someone selling it. But if there aren't enough sellers, the price jumps and you pay more. Bullish solved this by creating their own massive pool of cryptocurrencies in a treasury format. So 90% of that is Bitcoin, and in total, it's worth around $2 billion. When institutions want to trade, Bullish can provide liquidity from their own stash, keeping prices stable even during market chaos. Now, this is critical for risk-averse institutions that might need to move hundreds of millions in crypto fast without affecting market prices and also trying to line up a buyer. Now, credibility is the other side of the coin. The dominant consumer-facing exchanges don't meet the robust compliance or security requirements institutions like pension funds require. While Bullish is not licensed in the US yet, it does have licenses in over 50 jurisdictions. And Bullish's CEO is another arrow in their quiver to create more credibility around their compliance-first approach. Tom Farley ran the New York Stock Exchange from 2014 to 2018. This guy literally ran Wall Street for half a decade and built relationships with the same kind of customers that Bullish wants to attract to its ecosystem. If Bullish's goal is to convince traditional finance that crypto is ready for the real money, this CEO can open more than a few doors. Banks don't respond to the SBF crypto bro in a hoodie playing video games. They need to know their big boy money is safe. And that credibility, that's the $1 trillion prize that Bullish is chasing. A crypto exchange exclusive to the richest organizations in the world sounds like a great business. But let's dive into the actual numbers, because if you don't understand them, it could be extremely costly. Bullish's finances are a bit difficult to understand because they operate as both a crypto exchange and investment fund, and that makes it difficult to suss out performance. I think I figured it out though, so don't worry. Bullish counted $250 billion in revenue for the 12 months ending March 2025. That's up 78% year over year, but don't be deceived by that big number, because that's just the volume for the trades that they handled. Reporting revenue in this way is like if eBay counted the value of all the products it sold as revenue instead of the fees they charge the sellers, which is how they actually make money. Now, the real story is a bit more nuanced. Bullish makes money through three main streams: trading fees from institutions executing crypto trades, usually around 0.1%, treasury income from their massive $2 billion in crypto holdings, and media revenue from CoinDesk, the media brand they bought that brings in around $50 million annually. Now, here's where things get weird though. Bullish swung from a $105 million profit in Q1 2024 to a $349 million loss in Q1 of this year. And while they're estimating a profit of over $100 million in Q2, how did profits crash so dramatically? It mainly comes down to how Bullish reports their finances. They use something called mark-to-market accounting for their crypto holdings, which means every quarter they have to report the current market value of their Bitcoin as either a profit or loss, even if they haven't sold anything. So Bullish blamed that $349 million loss on price volatility between reporting periods. The good news is that despite the paper losses, Bullish generated $38 million in operating cash flow over the past 12 months. This suggests their core business is cash flow positive. So with the IPO coming up, let's not forget about valuation. The top of their expected range puts the business at $4.2 billion, and the way to see that number is that it's mainly tied to book value. With $1.9 billion in digital assets, investors are essentially paying 2.2 times book value for these crypto assets plus the exchange business. Now you could justify this in a few different ways. First, that the exchange business has significant potential beyond the crypto it holds. Second, that the professional management of crypto assets justifies a premium, like with MicroStrategy. And third, that Bullish's extensive global regulatory licenses and infrastructure create a competitive moat worth billions. It's just hard with this business to compare it to any other exchange because its business model is so unique. Most exchanges don't hold crypto assets that make their profit swing wildly, and that volatility makes Bullish very risky. So let's dive into more of what could go wrong. Okay, so what's the bear case that could derail this hypey, hot summer IPO? After this section, you'll walk away with a core understanding of a couple key risk factors. The first is that the demand Bullish wants to go and capture may not be real. They're building an exchange for institutions, but institutions might not want what they're selling. Bitcoin and Ethereum ETFs launched in 2024 and attracted tens of billions in inflows. These ETFs let institutions get crypto exposure without the headaches of custody, security, or dealing with crypto exchanges directly. Why would a pension fund choose Bullish when they can just buy a Bitcoin ETF through their existing broker? Traditional banks are also entering crypto, aware of this growing demand amongst their clients. JP Morgan, Bank of America, and other major banks are building their own crypto trading desks. They're keen to keep the institutional money in their own ecosystem and not let it leave for someone else's. Market volatility, like I pointed out in the previous section, is also a massive risk. Bullish's revenue swings wildly with crypto prices. When Bitcoin crashes, trading volumes collapse, institutions pull back, and Bullish's treasury loses value. Their own SEC filing admits our operating results will continue to be subject to significant fluctuations due to digital asset price volatility. Regulatory risks also compound the problem. Bullish operates across multiple countries, each with different crypto rules. If major jurisdictions like Hong Kong or Singapore were to change their policies, it could dramatically affect the business. And if Bullish can't get licensed in the US market, it's going to be missing out on 40% of the total global crypto market. But what if Bullish can execute? And what if their vision for the future of money management is correct? If you're investing in Bullish's business, you're actually betting on a broader economic shift happening. According to Mordor Intelligence, the crypto market is projected to reach $7.98 trillion by 2030. More importantly, a Coinbase survey found that 83% of institutional investors plan to increase their crypto allocations this year. Now that's a lot of bread heading the way of crypto. Global institutional assets under management exceed $100 trillion. And if institutions allocate just 1% of their assets to crypto, we're talking about massive sums flowing into the category, much of which could be through Bullish. To execute on their grand ambitions, Bullish actually wants to become more than just an exchange. They want to white label the infrastructure that banks and asset managers need to offer crypto services to their clients. If your bank ever offered features like Bitcoin savings accounts or crypto lending, Bullish would likely be the invisible force powering it behind the scenes. But probably the biggest opportunity of all that Bullish hasn't yet tapped into is the US market. They aren't licensed here, but the Trump administration's crypto-friendly policies and the recent Genius Act are opening doors. Circle's successful IPO this summer proved that US institutions have enormous appetite for compliant crypto infrastructure. If Bullish can get regulatory approval to serve US hedge funds, asset managers, and banks, it would unlock the world's largest institutional market. And just like how Circle's IPO opened doors with US institutions, Bullish going public also sends a similar signal to Wall Street. Being a public company subjects them to SEC oversight, quarterly reporting, and the same scrutiny that these traditional financial firms face. If institutions are going to hand you trillions, they want to make sure you're playing by the same rules. So I just told you the story of Bullish, and to end this out, I feel like there's two roads where this thing splits. Those convinced that crypto will become a core part of institutional finance might see Bullish as a foundational bet. But if you don't like the volatility around crypto, and especially Bitcoin treasury businesses, as well as you think that ETFs are going to be a more popular mechanism for institutions to get involved in crypto, you're probably sitting on the sidelines. No matter where you stand on this business, I hope you enjoyed this video. And if you want more content like this, I have this one I made on AMD and this one I made on Figma.